you heard of tax advantage accounts? Do you know that there are ways to reduce your taxable income so that you don't have to pay as much money to the IRS, and it's legal and it's totally fine? Definitely think more about this. You can invest in your retirement accounts. You can invest in extra retirement accounts. You can invest in Roth IRAs. There's so many tax shielded accounts. And one of them is an HSA. Have you heard of it? It's a health savings account. And my husband and I, we take advantage of like all of the tax advantage accounts except for this one. And so I'm going to share the pros and cons so that you can figure out if you want to go ahead and invest in an HSA. It's a triple tax advantage account. And so my husband and I are trying to figure out if we're going to do it. Let me know after this video if you want to persuade me or dissuade me. And so let's just go ahead and lay it all out there. What are the pros? What are the cons? Like anything, there's always a pro and a con, and then figure out if it's worth it to you. So first, what is a health savings account? So an HSA is the acronym. It stands for Health Savings Account, and it's a tax-exempt savings account that is available only to people who have a high deductible health insurance plan. And the money can be used to pay for qualified medical expenses. If the money is spent for any other purpose, the account holder might have to pay income tax on the withdrawal plus a 20% tax penalty unless the person is 65 or older. Is eligible for an HSA. And so you must meet these standards. You must have a qualified HDHP. You must have no other health coverage. You must not be enrolled in Medicare, and you cannot be claimed as a dependent on someone else's tax return. One of the cool things and important things to know about an HSA is that the money does not expire. So when you reach the end of the tax year or the end of the year, the money will roll over. And so this is different from a flexible savings account or a flexible spending account you might know about an FSA. And so you have this certain money, and by the end of the year, you have to use it up or you lose it. If you decide to invest in an HSA, this money can be used for qualified medical expenses, which can be great because typically over the lifespan, you actually will need to spend money on your health. But also, if you wait till a certain period of time, you could take it out and you can use it on anything, right? If you're over 65. And so that's why some people can use it as a retirement account if they don't use it on medical expenses. And then once they're older, it is more for when you're older and if you live a longer life, but it is a strategy that some people use. But for 2024, the limit is $4,150 for an individual, and it's $8,300 for a family. And so you can contribute that much. Plus, if you are older, if you are 55 and up, you can add an additional $1,000 to catch up. So now that we know a little bit about an HSA, how much you can contribute, etc., let's just go ahead and get into it. What are the pros? What are the cons? So first, let's start with the pros. And so first, other people can contribute. So other people, your employer can contribute to this, a relative, or anyone else that you want to contribute to your HSA. And so that is really helpful. So anyone can contribute more money and you can have more money at the end of the day. Number two, it's a triple tax advantage account. That's why a lot of people like it, because your employers don't have to actually pay taxes on it. And then once the money goes in, you don't have to pay taxes. And when you take it out, you don't have to pay taxes. And so I talk about a Roth IRA, which is a double tax advantage account. And so it's taxed initially from your employer, but then the money isn't taxed as it goes in, and it's not taxed as it grows, and it's not taxed as it comes out. And so an HSA is even better in terms of taxes. It's also tax deductible. So if you make contributions after tax dollars, then you can go ahead and deduct the money from your gross income, which is another way to reduce your taxable income. Advantage is, like we talked about with an FSA versus an HSA, is that the money will actually carry over. So maybe you didn't need the extra, you still have $1,000 in the account, you didn't need it, or $8,000. And so it goes over and you don't have to go, oh, I didn't spend all my money, I'm going to lose that money, right? And so that is a pro of an HSA. Also portability, so if you change employers, etc., it's still in your name and you can move it around wherever you need and keep the same amount of money. Lastly, there's convenience. And so most of these HSAs come with a debit card. And so you can pay for prescriptions, you can pay for any of these medical expenses. And right, you might be paying a lot for medical expenses anyways. And so this is cool because instead of just getting it deducted, the money, maybe you got $2,000 and then your employer had to pay taxes, so you got less than that, and then it came in, and then you're going to end up paying taxes again. If you have a lot of medical expenses or things, you just get the money from the employer, they don't have to pay taxes, and then you just pay for it. And so it really can help certain people. All right, next. So those were some pros, but let's talk about the disadvantages because there are some. And so there are taxes and penalties. And so if you withdraw funds from a non-qualified expenses before you turn 65, so that just means for like if you are going to buy a hot air balloon or whatever you end up buying that isn't a medical expense, then there's a significant penalty. It's about 20%. And so this can be really challenging for some people, but if you use it for medical expenses, then it's not a problem. Okay, you also have to do record keeping, so you do need to keep your receipts and make sure it's for a qualified expense, etc. So you have to make sure you're tracking and keeping track of all that information. There are also some fees, and so some HSAs are charged a maintenance fee, and so just look into that if you are going to go down the HSA path and see how much the fees are and if it's still worth it to you. Another big one that can bother some people is that you have to have a high deductible insurance plan, and so you're going to have to pay a lot of out of pocket first, and then you will have those lower payments. And so that can bother some people. And so you really just have to do the math on that. We can do a video on the math and compare and contrast if you're interested in that. But that can be a really big hiccup for some people on why they choose just to avoid it. The main benefit of having an HSA is to alleviate some of the stress of the expenses that come your way with any medical bills, and it helps you to lower your taxable income. It helps you to have a little bit more money that goes specifically to medical expenses instead of paying taxes on it, and then it still has to go to medical expenses. So it is trying to help you out, and if you end up not using some of the money, it can be a great retirement and wealth building tool down the line as well. So that was a little information about HSAs, some pros and cons. And so let me know in the comments below what you think. Do you have an HSA? Do you want to do one? What are your thoughts on it? And do you have any more questions? Definitely let me know in the comments below. Feel free to give this video a thumbs up if you liked it, share with a friend, subscribe for more, and hit the notification bell if you want to be notified about more videos like this. Thanks so much for being here. You've got this, and I'll see you in the next video. Bye, guys.